On January 17, 2025, just days before his second inauguration, former President Donald Trump launched his own cryptocurrency, Dollar Trump. Announced on Truth Social and Twitter, now known as X, the coin was positioned as a way for his most ardent followers to show their unwavering support. The hype was immediate and intense. Trump supporters, many of whom had never dabbled in the world of cryptocurrency, flocked to buy Dollar Trump. For them, it wasn't just an investment, it was a badge of honor, a way to stick it to the liberals and the mainstream media. If you're enjoying this video, don't forget to like, subscribe, and hit the notification bell for more updates. Almost immediately after its launch, the price of Dollar Trump skyrocketed. Within 24 hours it had surged over 18,000%, reaching a high of $33.87. The total market capitalization, a measure of the coin's overall value, soared to a staggering $5 billion. Social media was abuzz with stories of overnight millionaires. People who had poured their life savings into Dollar Trump were bragging about their newfound wealth. The sense of euphoria was palpable, but like all things that go up too quickly, what goes up must come down. While many were caught up in the frenzy, some experts began to raise concerns. The most glaring red flag was the concentrated ownership of the coin. Trump-affiliated companies, including one run by his son, Eric Trump, controlled a whopping 80% of the total supply. This meant that the fate of the coin was largely in the hands of a select few. Critics also pointed to the lack of any real utility for Dollar Trump. Unlike other cryptocurrencies that power decentralized applications or offer unique functionalities, Dollar Trump had no inherent value. It was, in essence, a meme coin fueled by hype and speculation. As if the existing red flags weren't enough, things took an even stranger turn on January 21, 2025, when former First Lady Melania Trump announced the launch of her own cryptocurrency, Dollar Melania. The launch of Dollar Melania further fragmented the market and confused investors. Was this a sign of confidence in the Trump brand of crypto, or was it a desperate attempt to cash in on the hype? Whatever the intention, it did little to inspire confidence in the long-term viability of either coin. On January 19, 2025, just 2 days after its launch, Dollar Trump reached its peak price of $74.59. The excitement was palpable, with investors celebrating what seemed like an unstoppable rise. Social media was abuzz with triumphant posts, and financial news outlets couldn't stop talking about the unprecedented surge. It felt like the dawn of a new era in the stock market. But, the celebration was short-lived. The very next day, the mood shifted dramatically. Investors who had been euphoric just hours before were now glued to their screens, watching in disbelief as the numbers began to tumble. It was as if the air had been let out of a balloon, and the reality of market volatility set in. The next day, as President Trump delivered his second inaugural address, the price began to drop. The timing couldn't have been more ironic. As he spoke of a bright future and economic prosperity, the market was telling a different story. The juxtaposition was stark and unsettling for many. This phenomenon, known as buy the rumor, sell the news, is common in financial markets. Analysts in studios across the country began dissecting the situation, explaining how the initial hype had driven prices up, only for the reality to cause a swift sell-off. It was a textbook example of market psychology at play. Once the anticipation of an event has passed, investors often sell their holdings, leading to a price correction. This is a well-known pattern, but it doesn't make it any easier for those caught in the downturn. The tension was palpable as investors scrambled to make sense of the rapid changes. In the case of Dollar Trump, the correction was swift and brutal. The speed at which the price fell took many by surprise, leaving a trail of financial devastation in its wake. The initial euphoria had turned into panic almost overnight. By the end of Inauguration Day, the price had plummeted to $33, wiping out a significant portion of the gains made by early investors. The losses were staggering and the impact was felt across the market. It was a harsh reminder of the risks inherent in speculative investments, and a sobering end to what had started as a moment of triumph. Throughout late January and early February 2025, the price of Dollar Trump continued to slide. Regulatory warnings from lawmakers like Senator Elizabeth Warren and Representative Jake Auchincloss, who raised concerns about potential conflicts of interest, further eroded investor confidence. By mid-February, the once soaring cryptocurrency had crashed back down to earth, losing over 80% of its value from its peak. The market capitalization, which had briefly topped $15 billion, had shrunk to a paltry $2.7 billion. An estimated 200,000 wallets, many of which belonged to everyday Trump supporters, were left holding the bag. While the hype and speculation surrounding Trump played a significant role in its rise and fall, it wasn't the only factor at play. The coin's journey was marred by a series of technical issues and questionable practices that ultimately led to its downfall. There were underlying technical flaws that contributed to its demise. These flaws were not immediately apparent to the average investor, but became increasingly evident as the coin gained popularity. The coin was built on the Solana blockchain, a platform that promised high-speed transactions and low fees, making it an attractive choice for new cryptocurrencies. Solana, while known for its speed and low transaction fees, has also been plagued by outages and security vulnerabilities. These issues raise concerns about the reliability of the platform. Furthermore, the Meteoric exchange, where the majority of Trump trading took place, was criticized for its high trading fees. These fees were seen as a barrier to entry for many potential investors. The high fees on the Meteoric exchange incentivized high-volume trading over the well-being of individual investors. This created an environment where only the most active traders could thrive. Adding to the chaos was the proliferation of scams and fraudulent activities. The lack of regulation in the cryptocurrency market made it a breeding ground for bad actors. Over 6,800 fake Trump tokens and more than 90 fraudulent decentralized applications or dApps popped up. These scams further confused investors and siphoned money away from the legitimate coin. The sheer volume of fraudulent activities made it difficult for investors to distinguish between legitimate opportunities and scams. This eroded trust in the Trump coin and the broader cryptocurrency market. As a result, many investors lost significant amounts of money, leading to widespread disillusionment with the Trump coin. The combination of technical troubles and shady dealings proved to be a fatal mix. In the end, the Trump coin serves as a cautionary tale for the cryptocurrency market. It highlights the importance of due diligence, robust security measures, and the need for regulatory oversight to protect investors. The story of Trump is a reminder that in the world of cryptocurrency, not everything that glitters is gold. Investors must remain vigilant and informed to navigate this volatile landscape. The collapse of Trump sent shockwaves throughout the cryptocurrency market. Bitcoin, the world's largest cryptocurrency, experienced a significant correction, as did Solana, the blockchain on which Trump was built. The fallout from the Trump debacle also sparked calls for increased regulation of the cryptocurrency industry. Lawmakers and regulators around the world, already wary of the risks posed by cryptocurrencies, pointed to the Trump saga as a cautionary tale. Beyond the financial losses, the collapse of Trump exacted a heavy emotional toll on many of its supporters. The emotional devastation was palpable, as people watched their dreams crumble before their eyes. People who had poured their life savings into the coin, hoping for a brighter future, were left in financial ruin. Convinced that it was a surefire path to wealth and a way to own the libs, they had invested not just money, but their hopes and aspirations. When the bubble burst, they were left feeling betrayed and disillusioned. The sense of betrayal was deep, as many had trusted the promises made by influential figures. The Trump saga serves as a stark reminder of the dangers of hype-driven investing. It underscores the volatility of the cryptocurrency market and the risks involved. The importance of due diligence cannot be overstated. Investors must thoroughly research and understand the assets they are investing in. It also highlights the need for greater transparency and accountability in the cryptocurrency industry. Regulatory bodies must step up to ensure that investors are protected from fraudulent schemes. The potential for political figures to exploit their followers for financial gain is a concerning trend. This saga serves as a cautionary tale, urging individuals to remain vigilant and critical of too-good-to-be-true promises. If you found this video insightful, please like and subscribe for more in-depth analyses and updates. Stay informed and stay safe.